You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Greetings, this is Dwayne, CFRN. I am going to share couple things with you. This is actually part 2 of the series that we have begun. The title, people always go, if it had a title, and of course it has a title, Emini Futures Trading. Analysis is not the answer. That sounds like would it be a palindrome? No. That's when you say, Madam, I'm Adam. That's a palindrome. But anyway, it's like jumbo shrimp. Huh? Analysis is not the answer. Well, then why do I have all these indicators and oscillators? Why am I measuring all this stuff? I mean, if analysis is not the answer, what is? Or is there an answer? Well, actually, there is an answer, and it's quite simpler than you might think. In fact, you might be kind of angry when you find out how simple it is, considering the number of years, the amount of time and treasure that you have put into this whole thing. Now, today just happens to be November the 14th, 2016. What a crazy, hectic day it has been. First, we started off our radio broadcast, no problems, everything's going along pretty smooth. And then my two guests, I think they dialed in at the same time. And, well, if you listen to part one of today's radio show from November 14th, at the end, as soon as the noise starts, you might want to just turn it off, because it only gets louder and it only gets worse. Should I have just cut it then and restarted the show? Hindsight, man, what a perfect science. But no, I drug it out and drug it out and drug it out, and then the light bulb went off. Hey guys, I'm going to shut it down. Everybody log back in, and we'll pick up where we left off. And so that all went very well. And then one of my co-hosts, my regular Monday co-host, who is, gosh, I just always thought the nicest gentleman in the world. He was on our show a long time ago, and my other daily co-host at the time was, I don't know, in my opinion, rather rude to him. And I felt bad. I really did. And I said at the time, henceforth, anyone who comes on this radio show, because come on, we're in our second decade of broadcast. I said anybody that comes in on this show, whether we agree with them or disagree with them, like the color of the shirt or not, doesn't matter. We're going to treat them with dignity and respect, period. Well, that co-host is no longer with me. And I'm guessing that today's co-host, I have two co-hosts. I have one co-host every day, one at the beginning, one towards the end. But then I have somebody in the middle, somewhat of interest. I got a feeling, it became a personal attack against my religious beliefs and my Christianity, and like, oh my gosh. And this was from like the most mild-mannered guy you could ever encounter. So I was just speechless, absolutely speechless. I wouldn't have hung up on him, although I had the ability, but he hung up because we started to talk about, see, in the world there are theories and there are facts. And then there's also this thing called conspiracy theories. But we won't even go there. We'll just stick with theories and facts. Okay? Now, my Monday guest, who comes for like a half an hour, he shares with us a lot of his theories. Okay? Today I shared some actual news based on a statement that the other guest had brought up, and I really didn't know which one was correct, so I thought, well, the best way to find out is don't tell anybody, but I Googled it, and I got an article from Reuters that validated what one guest said, and the other regular Monday guest, it sort of invalidated what he said. And so everything kind of just really went downhill from there. And we ended up spending so much time on the air with that episode and the breakdown between part 1 and part 2, and the fact that my second guest, he had, some things he wanted to get covered, and I had to leave to go do mentoring. See, my mornings are spent. Let me give you a peek into my day. I arise early, about 6:30, because the markets open at 9:30, and since I live in Phoenix, Arizona, at this time of the year, when there is no daylight savings time, it's just regular time, the markets open at 9:30 my time. Now, I think it's 4 months out of the year, they actually open at 6:30 my time. So this is the good time of year where I get to sleep in. So anyway, I'm up and about 7:30 in the chair, ready to go to work, ready to do what's got to be done. We have the live trading room along with my co-host there, Michael, who is also my business partner and who is also our lead trainer and trader. And so he actually takes care of most of the operation of the live training room himself. Now, what I do is, in the background, I take care of all the other stuff that has to be done. The emails that have to be answered and phone calls that have to be returned. And I also, during that first 2 hours that the markets are open, that's when I do our daily doubles. And if you're not familiar with those, you can go to our website and check them out. In fact, if you go to emini.cfrn.net, there is a link. Wonder if I could show you that link. I bet I could. Let's see here. Yes. You got to hit the 3 little dots here. Now, I realize that says plus.gobbledy.gook, but if you simply type emini.cfrn.net, Emini, what we do, CFRN, who we are, and .net, just because it sounds cool. Hit enter. There you go. Okay, so you hit the 3 little dots. Now, a couple things we offer. There's the concierge trade alerts. There's the daily double. There's, of course, the live trading room. That is the nexus of everything that we do. That's the crux of the apostrophe. That's really what it's all about. CFRN was created to teach you how to trade, not to razzle and dazzle you, daze and amaze you with things that are pulled out of hats and other assorted parlor tricks, but to actually teach you how to look at a chart, see what's there, and then based on that gathering of information, make a determination and place a trade, be it long or short. Anyway, The daily double, which I'm doing during the live trading room, Michael is talking to all of the students and all of the guests, those on the free trial who are in the live trading room. He's explaining the trades he's taking. He's walking everyone through each of the trades. You know, I pop in whenever I need to say something important or relevant or whatever the case might be. But in the background, I am doing the daily double. The daily double, get 2 trades delivered to your smartphone or your tablet or your PC for the next 5 days. Just click it right here and it'll take you to a page that explains, well, everything you need to know. This is the link if you want to take the live trading room free trial. And also, during the live trading room, I'm in the background putting together the 1 trade a day. Now, you only need 1 good trade a day. It's okay to have 2 or 3 or 4 okay trades. But if you have just 1 good trade a day, well, that reduces your commission costs. Right? We all on the same page? Now, on the 1 trade a day, the name is misleading because I actually send out 8 markets. It's $75 per market per month, and it's a minimum of 2 markets, okay? Now, those are posted on the web, a secret website, behind a secret door with a secret password. And the password changes every week, and we send those out to you. And when 11:30 a.m. Eastern rolls around, you go to the secret website and you go to, if you've subscribed, for instance, to the S&P and crude oil, we've already emailed you the passwords for that week for those doors. And when you click on it and put in the password, the door opens and the trade for the day is revealed. Now, we have, again, it's $75 per market per month. So you get 5 times 4, you get 20 trades per market over the course of a month. But there is a minimum of 2 markets, okay? So it's $150. So you actually get not just 20, but you got it, 40, okay? All right, so that covers that. So I'm in the background putting together the 1 trade a days, which go live at 11:30 a.m. Eastern. Prior to that, I send out the daily doubles. Now, where you have to go online and go to a website and log in and enter a password to get your 1 trade a day, the daily double just pops up on your smartphone or on your tablet or on your website, however you've chosen to configure it. But how cool is that, to have 2 trades a day delivered to your smartphone? I mean, maybe you have a job where you're on the road or out on the job site and your phone makes a certain sound. You whip it out, you know it's a trade. You open your broker's app on your cell phone or your tablet and enter the trade. We give you the entry, we give you the target, we give you the stop loss. You set it and forget it. You can check back in later in the day, end of the day, see how things worked out. Okay? So anyway, all of these are available at emini.cfrn.net. So I was telling you how my day goes. Well, after I get all of that done, I take a whopping 30-minute break. And It's 12 noon Eastern after my 30-minute break, and that's when we do 2 hours of live radio. We are in our second decade of broadcast. Okay, so from 12 to 2 p.m., that's where you'll find me, behind the mic. Then I take a short break, and then I begin my mentoring sessions for the afternoon. You see, when someone enters our 90-day mentoring program, something they get which is very unique and that you don't find with most educational firms is you get unlimited personal one-on-one mentoring. What that means is, during your first 90 days, and after that, if you decide to remain an active partner for a minimal monthly fee, you have unlimited access to personalized one-on-one mentoring. I know, true story, hard to believe, but we do it, okay? Been doing it for a long time, got no plans to change that, okay? So, that's how my day goes, and that's how it comes to be that it's late on a Monday night, and I'm just finally getting around to this part 2 installment of Emini Futures trading. Analysis is not the answer. And it really isn't. Now, men and women, for many, many years, have spent lots and lots of money on indicators and oscillators and things that go bump in the night, trying to avoid the pain of being stopped out. Nobody wants to be stopped out. Unfortunately, being stopped out is part of trading. They go hand in hand, part and parcel. It's all part of the same package. But no one wants to hear that, so no one wants to tell you that, and they certainly don't want to try to sell you that. We just tell you the truth. You might not always like what we tell you, but we'll always tell you the truth. Now, whenever we go to Vegas or wherever we might go on vacation, or you might just go to some local place wherever you live for a quote-unquote magic show. But we all know that it's not really magic. I mean, maybe if you're a weak kid, you might believe in magic. If you believe in magic. They believed in magic. But we know that it's really an illusion, right? Did David Copperfield really make the Statue of Liberty disappear and reappear? No. Sorry. Hate to burst your bubble. While I'm at it, I might as well just go ahead and blow the whole thing. There's no Santa Claus or Easter Bunny. Sorry. But like I said, we're always going to tell you the truth, okay? So there's no magic in trading. There's no secret that unlocks the door to endless riches. It simply doesn't exist. Now, over the course of this series, which will run somewhere between 5 and 10 days, I've already written a blog post years ago that mathematically explains why it's impossible for someone to ever create an indicator or an oscillator that could tell you what's going to happen next. You see, because that would be magic, and we know that magic doesn't exist. Illusion, however, exists in spades. Walk down the strip, and almost every other casino has a dazzling magic show starring the world-famous illusionist so-and-so. I've heard the Chris Angel show is not that good, so if you go, don't go see that one. But who doesn't love a good illusion? Even on the TV show America's Got Talent. I mean, some of those guys are just absolutely incredible. Except when you catch them. Like if you have the instant replay on your television where you can back it up and play it over, back it up and play it over. If you back it up and play it over enough times, you can usually, not always, but usually catch them. You figure it out. And it makes you feel a little soiled, like you want to go take a shower because, well, you knew already it wasn't magic. You knew it was just illusion. But see, until you figured it out, there was this part of your brain where it was still magic. Do you believe in magic? See, but it's not. It's illusion. It's all illusion. Now, can you imagine one of these trading websites, and on their home page it says, "We have some great illusions that we'd like to sell you. We would like to sell you an illusion that will allow you to make X number of points each and every day and never get stopped out." Now, if you thought it was magic, I'd buy it. But if you know it's illusion, there's no way you'd buy it. Well, I'm telling you today, it's all illusion, okay? There is no magic. It's all illusion. I'm sorry. I feel bad. I'm certain come tomorrow, half the traders in the world are going to not clock in, and they're all going to go find work doing something meaningful like pizza delivery or whatever it might be. But for those of you who are willing to accept the fact that it's illusion, that analysis is illusion, because that's really what they're selling you. They're not saying, hey, let me sell you this illusion. What they're saying is, let me sell you this analysis. And the analysis is what creates the illusion that you can win and not lose at this business called trading. It's not true. Now, I'm defining an illusion as believing that something is true that doesn't have any basis in fact other than in our imagination. The illusion of analysis stems from the belief that with the right analysis, with the right indicator, with the right oscillator, with the right guru, with the right cheat sheet, with the right fax service, with the right something, we can be winners. We also could learn how to trade, but I don't know. That's an awful lot like work. The illusion of analysis comes from believing that with the right indicators and with the right oscillators, we can accurately predict the impact that other traders, buy and sell orders. Remember, in the blog post, I describe it, I use the analogy of this giant poker table. And every trader in the world, all around the world, they're assembled at this poker table. Okay? Now, what we have to do in order for the illusion of analysis to turn into a fact of analysis is we have to accurately predict the impact that other traders' buy and sell orders are going to have on the direction of price. To the extent that we actually eliminate the risk of losing and assure ourselves of a winning trade. How many times have you put on a trade that you absolutely knew was going to be one humdinger of a winner? Man, you've been practicing that thing for 3 weeks. You know it inside out, backwards, forwards. There's no way this can fail unless the market really does know when you go live. The market really does care if you go live with one contract or however many contracts. And they purposely run your stop, no matter where you put it. So maybe you're running with the crowd who's so clever that they say, we're gonna fix them. We're not gonna place any stops. They can't run them then. If we don't have them, they can't run them. No, but your account can sure run out of money pretty doggone quick that way. Unfortunately, many of you have already found that out the hard way. When we're operating out of this illusion of analysis, it seems as if we can take the gambling component out, not in, but out of speculating on price movement. You have to understand, that's what we're doing. If we're trading, whether we're trading equities, there's a little bit of a difference there because we may do some fundamental analysis and there may be some mitigating factors that can be applied to equities that simply don't exist in the Emini Futures or in all futures, okay? Now, there is a little bit of fundamental analysis that you can apply to soybeans and to crude oil, but as a general rule, we don't trade news. So if there's a big ag report coming out like the WASDE, or if you're getting ready to announce the crude inventories, we don't partake in that at all. We just step aside, let the excitement happen, and once everybody's settled back down, that's when we go to work, okay? Because we want to trade what we know and what we understand, not this whipsaw stuff that comes out of news. You can be right. You might believe that crude oil, they're going to come in with inventory numbers that are short, and man, the price of crude is going to fly sky high. And you might be 100% right. But before it flies sky high, it takes a dip. Why? Why it take a dip? Who knows? And why bother trying to figure out when it's much simpler to just simply wait, right? Until the excitement dies down. It takes all of 15 to 30 minutes. And then when the market resumes its normal pattern, its normal rhythm, if you will, then we go back to work. As far as removing this gambling element from what we do, this speculation of price, as long as we're dependent upon the illusion of analysis, nothing could be further from the truth. And ultimately, we pay a very high price for believing it. The illusion of analysis is one of the primary psychological forces behind the trading errors that can keep us in a perpetual cycle of boom and bust trading. How many of you have been caught up in that cycle? Not once, not twice, but more times than you can remember. When you look behind you at the litany of blown up accounts, it goes farther than the eye can see. You can't even remember who your first broker was. It's gone on for that long. I talk to people every day. At 10 years they've been at this. Guys have asked me, why couldn't I have met you $300,000 ago? I don't know. I don't have the answer for that. What I do have the answer for is how we can get you to a place of consistent profitability in the markets if you're willing to put down the toys of analysis and learn to think in probabilities. If you can do that, if you can develop patience, if you have discipline, together we can turn the ship around. Now, what I want to try to do here in just a few minutes, because I wanted to keep each one of, this is just the second in the series of this lesson, of these lessons, and I only want to give you enough that you can absorb at one time. Okay? You absorb it, you put it into practice, and then tomorrow I'll give you a little bit more. Worst thing I can do is try to give it to you all at once, and you're not able to absorb it, you're not able to practice it, and then it's for naught. Okay? So, my job is simply to explain right here, right now, how the illusion of analysis works and why it's so easy, as well as emotionally compelling, to get trapped in a trading perspective where I'm defining an illusion as believing something is true that doesn't have any basis in fact other than in our imagination. The illusion of analysis stems from the belief that with the right analysis we can accurately predict the impact that other traders' buy and sell orders are going to have on the direction of price. To the extent that we actually eliminate the risk of losing in our own minds, in our imagination, we absolutely, positively eliminate. We need some illumination to get us out of the darkness, but we eliminate the possibility of actually losing. Now, what does that lead to? You know what it leads to. It leads to tragedy. What I want to do here, just really quick, and then we're going to go. I'm serious. We're already 35 minutes in, and I know I talked a little bit about some other stuff up front, but we're going to keep these lessons in little short, bite-sized chunks. Instead of being assured of winning trades, and that's probably what's happened with every guru, every teacher, every website, every email that you found yourself entangled with, and even brokers to some degree, assuring you that if you do this and if you do this, you're going to be a winner. until you don't have any more money. And then suddenly they don't take your calls anymore. If we buy into that, the only experience we'll absolutely be assured of is erratic results and a whole lot of frustration. One day we'll be dancing on the desktop like Fred Astaire. Ooh, look at me. I'm a trader. All you poor suckers out there got to work for a living, breaking your back, breaking a sweat. Not me. My fingers are just dancing across this keyboard, generating money like an ATM. When I get those phone calls, I literally want to cry. People go, "What's wrong with you?" I'm like, I don't mean to rain on your parade, but this type of call that you're bringing me today is usually followed tomorrow or the next day with a very different call. You're curled up in a fetal position under your desk, and you can't understand why you suck, why the world hates you, why God hates you, and why the market is your enemy. Well, you don't suck. God doesn't hate you. The markets don't even know you exist, and the market certainly is not your enemy. Okay? We prefer to look at the market as our business partner, our senior partners. S&P, Dow, NASDAQ, Russell, gold, crude, whoever we decide to do business with on any given day. We simply want to meet them, chat with them, talk to them for a little bit, and say, "What do you want to do today?" And we sit back and we look at the price. Remember, it's not the indicators. It's not the oscillators. They cannot predict the future. All they can do is accurately measure what's happened in the past. Now, our indicators, I refer to them as a set of fancy reading glasses. They don't change the facts of what are on the chart. It's simply that once you understand how our indicators work and you slip those fancy reading glasses on, all of a sudden you're like, "Whoa, man, I would have never seen that. Oh my goodness." You take your trade, you get your points for the day, you're down the road. That's all we're looking to do. We're not the grand slam home run team, okay? We're the base hit guys. That's it. We are going to teach you, if you were to become a mentoring partner with CFRN, we're going to teach you how to make $100 a day on one contract. But first, you've got to prove that you know what you're doing in the simulator before we're going to give you the green light to go live with real money. Why? Because we care about you and about your money. Now, you've already paid us, so blow your money. There's no skin off our nose, but we don't see it that way. You see, we want you to be a part of our community. Our community, a community of believers who trade for a living, is about making the world a better place. So we want you here not just for today, not just for 90 days. We hope you'll be here 3, 5, 10 years from now. Okay? Are you with me? Now, the illusion of analysis stems from the belief that with the right analysis, the right indicators, the right oscillators, we can accurately predict the impact that other traders buy and sell orders are going to have on the direction of price. How ridiculous is that? Once our indicators give us a high probability setup to go long, we'll just use that as an example, okay? Our indicators have done their thing, and they tell us we should enter long at this price, okay? Now, our price target is either going to be 8 or 10 ticks away, depending upon which market we're trading. If it's gold or crude, it's going to be 10 ticks away. If it's the S&P or soybeans, it's going to be 8 ticks away. Now, we've entered the market long because the indicators, our definable edge, told us that this is the high probability setup you've been waiting for, and we know the exact price to enter at. We don't get left behind because we don't enter on a limit. We always get into the trade because we buy and sell on a stop. So the momentum of the market is what carries us in. Now, once we've done all that, it's out of our hands. There's a great illusion that somehow there's something we could do, say, or pray, or something that our indicators or oscillators could do that is going to move price higher and higher and higher until it hits our profit target. Nothing could be further from the truth. What has to happen is other buyers around the world, for their own reasons, because of some geometric pattern that they see, because of some mathematical equation that they're running, they have to have a valid reason to also buy after you buy. You buy, then they buy. Hopefully, because you do have a definable edge, hopefully enough people around the globe, hopefully more people are going to see a reason to buy the market than to sell the market. If more people see a reason to sell the market than buy the market, guess what? You're going to get stopped out. Is that your fault? Did you do anything wrong? Did you make a mistake? Are you a bonehead? No, not at all. You did everything exactly the way you were supposed to do it. We talked about flipping the coins. Remember? 1 quarter, perfectly balanced. Flip it 1,000 times. On average, 500 heads, 500 tails. But then we talked about, well, what if we took a little piece of sandpaper to one edge of that quarter, and we sanded it, and we sanded it, and we sanded it just enough to the point where if we always flipped it from a heads up position or tails up position, depending upon how much you sanded and can get away with without being caught, you have a coin now that will come up heads 70% of the time. Wow. That's pretty sweet. Because remember, the best trader on planet Earth will be profitable 7 out of 10 trades. That means 3 out of 10 trades, he's got to do what? He's got to bite the bullet. Now, let's say you've got a guy, and he wants to play the coin flip game with you. And he says, let's flip this coin 100 times, and every time it comes up heads, I'll pay you $100. You're salivating, right? What if he says, but you know, I want to change the rules. What I want you to do is I want you to call each individual flip. Because even though you have a well-defined edge, which is heads 70% of the time, now there's an element of risk. You could lose money, because in this hypothetical game, when you're right, you earn, and when you're wrong, you lose. We're going to drill a little deeper into how a game like that might play out, and some different ways of looking at it that will help you look at the market a little bit differently. As traders speculate on the direction of the price, the risk of losing and being wrong is a function of the number of buy and sell orders and the size of the buy and sell orders. See, it could be 100,000 one-lot traders, or it could be 2 50,000 lot traders. Yeah, they really do exist. And what we're speculating is on what they intend to do after we enter the trade. There's not a chart pattern, a mathematical equation, or an analytical premise in existence that can factor into its prediction the size and number of orders that are going to hit the market once you go long or short. The variables are too many. These variables determine whether we end up in a profitable or an unprofitable trade. By the end of tomorrow's lesson, you're not going to be singing, "Hey, I'm a winner." And you're not going to be singing, "I'm a loser." What you will be humming on the way home is, "When I'm not profitable, it isn't my fault." And you're also going to be humming, "When I'm profitable, it isn't my fault." What? I want to become a trader. I want to become a great trader. I want to become the best trader that ever lived. Okay. Then you probably should do something that has to do with fundamentals, are the live cattle looking a little skinny this year? Are they heavy on the hoof? Is it raining a lot in the Midwest? Are the soybeans going to get drowned out? Because in the indices, the S&P and the Dow and the Russell and the NASDAQ, and to a lesser degree gold and crude. Outside influences, economic reports, fundamental analysis. Fundamental analysis is almost more ridiculous than technical analysis, and that's what we teach, technical analysis. But I've come to see it in a brighter light, and I'll still always use technical analysis. I won't return to the world of fundamental analysis, although we do have something coming up. And let me make sure before we run out of time, let me show you this. When you go to the page, what do? Emini. Who are we? CFRN. What sounds cool? .net. Emini.cfrn.net. Oh, you got to spell it right. Boy, they're such sticklers about that. Emini.cfrn. What? Emini.cfrn.net. Do I have a broken? I've broken my... Oh, there it is. Anyway, emini.cfrn.net. It works. All right. When you get to this page, I've explained this part, but right over here, where did that go? CFRN's #1 investment opportunities for 2017. I swore off stocks in 2005, but of late, we've had so many of our partners say, man, you used to be really good at picking stocks. Is there any chance, any possibility that you'll ever cross back over from the world of futures? The answer is, it's a full-time business. Absolutely not. Futures simply, there's too much in my favor. There's too many positives, from tax benefits to reduced paperwork. I mean, the list goes on. But every now and then, there comes a Microsoft. They went public at $21 a share. Today it trades at a whopping $59 a share, but it's been through roughly a cajillion stock splits. And so, had you invested $1,000 back in 1986, today that $1,000 would be worth $821,261. Remember that little online bookstore that went public back in 1997? When they IPO'd, if you had $1,000, you could have bought 55 shares. Those 55 shares would be worth today $368,066. Now, these are just two examples that most everyone is already familiar with. Okay, we all know the Cinderella story of Microsoft and Apple and Amazon, and it's like, why can't I ever buy those companies, right? How many times have you asked yourself that? Now, even though those are some extraordinary gains, there's a lot of companies out there that have produced even larger gains. Really? Everybody's Googling, trying to find out who they are. You're not going to find them. Why? Because as they began to run up, they were bought up. They were absorbed by the mothership. So that's why you haven't heard of them. That's why you don't know about them. These gains here, these types of gains. See, this took from 1986 to 2016. This took from 1997 to 2016. There are companies that have appreciated this much in 2 to 3 years, some 5 years. But again, you never heard of them, because as they ran up, they were bought up, they were bought out, the names were changed, the innocent were protected, and a lot of people walked away with a really big smile. Now, I think in the coming year, I don't know how the equity market, is Wall Street going to make friends? Is Donald Trump going to make friends with Wall Street? Is Wall Street going to make friends with Donald? I don't know. They bought and paid the wrong candidate. They all wrote checks to Hillary. Lo and behold, they're a little bit shocked and shattered because Hillary didn't win. Donald won. Some of them are still on a binge. They can't believe it. Boys, you better sober up and come back to the office. There's work to be done. Okay? Into your tax selling, lots going to happen. So I've got my eyes on a few companies. It's not a lot. It's just a handful. But these are ones that I honestly believe have the opportunity to produce triple-digit gains in the year 2017. Now, I'm going to share that list with a few thousand of my closest friends. If you want to be on my Christmas card list, remember, we got to get through end of year tax selling before we can do anything with these stocks. Okay? Click here. Enter your information. Click sign up now. You will receive an automated email response. Okay? Now, you got to click the link. That's the only way you get added to the list. We hate spam as much as you do. We don't believe in it. And so, once you get on the list, don't expect to hear from us every other day or every week. Or, in fact, you get on the list now, get on my Christmas card list, you probably won't hear from me about this until maybe the week before Christmas. And at that point in time, I will be getting you prepared. We'll start to talk about a watch list of stocks that you want to be prepared for when the new year rings in and the tax selling is over. This is where we want to go fishing. Okay? So, do the deal. Get signed up. Forget about it. And just remember, I got something real nice in store for you for Christmas. I really believe that. And I can't wait to see it come to pass. Now, when you go to our website, cfrn.net, something new, this little box is going to drop down in front of you. It's only going to drop down once, okay? So think carefully before you click or click, because it's not going to pester you every time you show up. CFRN Emini Futures would like to send you live trade notifications. You can choose to turn off notifications later, anytime you want, using your browser settings. Okay? So you got nothing to lose, you got everything to gain. Now, I plan to send out tomorrow at the beginning of the radio show, 12 noon Eastern. I have not sent out a group message using this new little tool as of yet. Tomorrow I plan to do it at the beginning of the radio show. So you don't have to go anywhere, you don't have to check anything, you don't even need your cell phone, you just need to be in front of your computer. Okay? Go to cfrn.net, see what pops up. Okay? If you click don't allow, it won't bother you again. It won't ask you again. In fact, if you click don't allow and you decide later on you wish you had clicked allow, I'm sure there's some way I can reset you, but it's designed that way because it's not to bother you and pester you. So click whatever you want to click, and then we'll move on. Also, I do want you to Google CFRN Emini Podcast. Okay? Then I want you to go down to about entry number 3, where it says iTunes, Apple. I'd like you to click that. And it's free to download iTunes. You may not have known this, but if you have a Windows computer, iTunes works perfectly fine on a Windows computer. And you'll see a list here of the most recent podcasts that I've uploaded. I got lazy for a couple years and I didn't upload any podcast. In fact, what I did was I just used an automated method to put them on our YouTube channel. See, every day when we broadcast live, we broadcast the audio stream. Our audio stream broadcasts 24/7. It's running right now, even as I speak. Yes, I'm just checking the radio server. That runs 24/7. So when you come to the radio show, you can listen to just the audio if you're driving or operating heavy equipment. You can log in using the GoToWebinar login software, or you can watch the live stream on YouTube. Just go to live events, CFRN. Go to cfrn.net youtube.com/CFRN, and you can watch the live stream there. Okay. If you want to chat with us, though, we don't monitor the chat box over on YouTube. I only have so many hands and I only have so much help. So I can only monitor the chat box that is in the live trading room. Now, in the live trading room, how do you get there? Well, you click this big microphone right here. And then down here where it says Watch Live Now, click that. You only have to figure out this registration sheet once per month. It takes you 30 seconds to answer these couple of questions. Okay, hit register. Then every day you'll get an email that remind you the show starts at noon. And in order to be a part of the show, you can join with one-click access whenever you're ready. But keep in mind the hours of the show are 12 to 2 p.m. Eastern. And I usually have to dash out the door right at 2 p.m. Eastern because I have to get to the mentoring sessions. Okay? All right. So let me get back to where I left off. And let me cover what little bit I'm going to cover tonight. And then I'll get into the swing of this. And we already hit an hour. I really want these to be about 20-minute sessions. So you help me and I'll help you. And together we'll get them down to 20-minute sessions. Otherwise, this course will take forever. Okay? Now, I want you to think about all the variables that would be necessary. We talked about chart patterns, mathematical equations, analytical premises that would have to be in existence in order for you to know what other traders are going to do. In fact, every other trader sitting around this giant poker table, you'd have to know what they're going to do, understand why they're doing it, and then hope they don't change their mind in the millisecond that you have to gather all that information, and then make your move based on that. It's pretty ridiculous when you think about it, huh? I'm not going to knock the MACD, the oscillator, the MACD, the stochastics, the RSI, Donchian channels, you name it, whatever those bands are. I'm not here to knock any kind of indicator or oscillator. They're all perfectly fine at doing what indicators and oscillators do. They measure what's happened in the past. They also help you develop a definable edge as to what may happen next. But it's nothing more than a guess. Until you can get over that and get beyond that and accept, write it on the tablet of your heart, that it's nothing more than a guess, you will not find consistent success in the markets. Here's a short list. I'll leave you with the short list. Here's what you would need. The next time you go to one of these sites or you get one of these emails that makes you all kinds of crazy promises about, the kind of money you're going to make. One today, I think I'm going to save it for the radio show tomorrow. It was the most outlandish thing I had ever seen or read in my life. Out and out larceny is what it was. But for any of the magical indicators or mystical oscillators to really work, you would need to know the following. How many traders in the world are getting ready to send an order to the exchange? Who these traders are, whether they're intending to submit a buy or sell order. You would need to know the size of their buy or sell order, the one that they intend to submit. Because remember, they can always change their mind or get up and go to the bathroom. The reasons why they've decided to put on or take off a trade. What course did they take? What indicator are they using? What oscillator do they have? What time frame are they on? See, you would need to know all that and more. And the degree to which all of the buy and sell orders from all the people all around the world destined to hit the exchange, how will it ultimately affect the direction of the price? Obviously, if you're long, you hope that it's going to positively affect the market and push price higher up to your target. But if it isn't, it's going to push price down to your stop. Want to know how to never be wrong on a trade again? Always have a hard target and a hard stop. If you do that, you'll always be right. Because price will always do one of two things. It will seek out and find your hard target like a heat-seeking missile, or it'll stumble and fumble its way down to your stop loss and take you right out of the trade. God, you just have so much more to learn, don't you? No. All you need to learn is a definable edge, and that's all we promise to teach you. See, we don't fill your head with a lot of unrealistic expectations. There's too much of that out there already. We simply teach you a definable edge. We then teach you how to think in probabilities. We then help you with your patience. We then help you with your discipline. And pretty soon, you're doing things you never thought possible. And then pretty soon, that monster rises up again, says, see, I am awesome. I knew I could do this. Oh yeah, I killed it today, I'm going to kill it tomorrow. Why don't you just go ahead and call me tonight and cry? Why wait till tomorrow? Because you've already put yourself in a position to fail. It's impossible to eliminate the risk of losing. It's impossible to assure ourselves of a profitable trade, simply because rationally based analytical methods cannot foretell the intent of all the traders around the world who have the potential to adversely impact the direction of the price after we make our prediction. That's all it is. When you get a bullish cross and price pulls away and price pulls back and there's an up close and you buy the open of the next candle, all you're doing is predicting that price will continue one more leg higher. And it either will or it won't. And it has nothing to do with you, your ability, whether you're a scoundrel or anything else. The longer you stick around, the longer you hear this, the more you put it into practice in the simulator, you're going to see what a difference this makes in your trading. You cannot eliminate the risk of losing a trade, nor can you assure yourself that you will win a trade. It simply isn't possible. What isn't possible is to acquire and operate out of a set of erroneous assumptions and dysfunctional beliefs that will make it seem like having the right analysis can get us into trades that are sure winners and therefore risk-free. In the world of speculative trading, and that's what we are price speculators. There isn't anything we can do that has the potential to cause more damage to ourselves than to believe that we're in a risk-free or reduced risk situation, when the reality is exactly the opposite. So even though you know there is a opportunity to be profitable and an opportunity to lose, based upon your definable edge, which brought you into the trade, but that's where its job ends. Now everything is on everyone else's back. Will they continue buying, pushing price higher to hit your target so you can go and be done for the day? In the world of speculative trading, there isn't anything we can do that has the potential to cause more damage to ourselves than to believe we're in a risk-free trade. Except in our methodology, we do teach you how to be in a risk-free trade. Now, that's simply a matter of mechanics. Has nothing to do with the psychology behind trading that I'm talking about. And so when you come and spend time in our live trading room, when you come and take a free trial, no obligation, no credit card, no nothing, just go to apply.cfrn.net, put in your name, put in your email address, take the free trial. We will show you how it's possible to get into a risk-free trial. But in the beginning, there's all the risk in the world based upon your definable edge. But to put it simply, once we reach a certain point in our trade, we move our stop to break even. And then we even move our stop to break even plus a tick. And so at that point, we can truly have a carefree state of mind. Because even if price comes back and even if price stops us out, not only do we not lose money, but the trade pays for itself. That one tick extra that we locked in, that will not only cover the commission on your trade, it'll even buy you lunch in some cases. And as you begin to trade multiple contracts, it'll buy you lunch at a very nice place. Now, if you're thinking every trader knows it's possible to lose in the markets, then it would be absurd for any trader to assume otherwise. My response would be, we can certainly be aware of the fact that we can lose, but not everyone believes that the risk of losing is a real possibility with every single trade they get into, with absolutely no exceptions whatsoever. Most traders believe there are, in fact, exceptions, as well as they believe their analysis can identify those exceptions ahead of time before they happen. And the traders, or the trades that they decide to get into, are the ones their analysis is telling them are going to win and not going to lose. You see, there's a very simple way to know whether you do or do not believe it's possible to trade without the risk of losing. A trader who believes that the risk of losing always exists would never contemplate getting into a trade without first predefining the risk. So they're never surprised when they find themselves in a trade that isn't working. Remember, we're defining the risk as the dollar value of how far the price has to move against our position to tell us that the trade is no longer an opportunity. And that's defined by the criteria of our own edge. In the live trading room, you'll see that it doesn't matter whether we're trading the S&P, the Dow, the NASDAQ, the Russell, gold. Doesn't matter. We risk 8 ticks on every trade, period. Because of our definable edge, the way it was designed, the way it was put together, the way it works hand in hand with our strategy. 8 ticks is all it takes to tell us we've chosen the wrong side of the trade. I don't even like to use the word wrong. It simply tells us that price is not moving in our favor. Probably isn't going to move in our favor. And that's our pain threshold. We make the determination then and there, and we made that determination when we entered the trade because we use a bracket order. When we enter the market, our trading platform automatically places a target, automatically places a stop loss. In fact, we don't even have to touch the mouse again if we choose not to. We can engage some automated strategies, or we can simply let the trade play out. These are options that you have available to you. Your focus has to be on what you can control. Too many people spend too much time and too much treasure trying to control the things that they have no control over. It's a nasty habit. It's a habit you have to break. When they do manage to define the risk and put a stop in the market, they're just going through the motions because they really don't believe that the stop's going to get hit. And if price gets close, what do? They either move it further away or they pull it all together. Pulling and moving stops is behavior that is consistent with someone who believes that analysis makes it possible to take the gambling component out of speculating on price movement. And I'm here tonight and tomorrow and the day after to assure you that analysis is not the answer. If you want to get in on the free trial, go to apply.cfrn.net. You can also sign up for the free trial here at cfrn.net, our main site. And if you want to take a look at the different trials we have available, emini.cfrn.net. Thanks so much for tuning in, and I'll see you tomorrow morning at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.